We have gotten one piece of legislation out of the U.S. called the Genius Act, stablecoin legislation. And in all likelihood, sometime in mid-November, we're going to get the second piece of legislation, which will help define what a security and what a commodity is, and a lot of other rules around crypto in America. That's a big deal. With those two bookends of legislation, it's going to unleash a tremendous amount of new participation in crypto. I mean, think about it's at one point get a little bit long, and it takes just a little bit for people to get nervous and some of the leverage to come out. We saw what it looked like some big Chinese mining selling. You also had, Arthur Hayes, who's one of the real thought leaders around crypto. Hyperliquid is the only top 10 that didn't exist a few years ago, right? It's a decentralized version of Binance, if you want to think about it. And it's a pretty spectacular story with the amount of growth it had. And Arthur said, hey, wait a minute, I think it's gone too far. The founders are going to sell. Well, they would have had a big grin on their face, right? And so you have to keep things in context. We're still up significantly on the year, both Bitcoin, ETH, and Solana.
Crypto price movement can foretell stock prices as well, more broadly. It's like a leading asset class. Do you subscribe to that? Do you believe that?
I'm not sure. Listen, I think sometimes it feels leading and sometimes it feels lagging. We are in a euphoric moment in stocks, and there is a lot of excitement all around this AI theme. AI is powerful. It is going to change the way we do things. I mean, think about it. You can't use stable coins on your iPhone yet. There's almost zero chance in the next few years you won't be able to use stable coins on your iPhone or on your Samsung Galaxy phone, social media app. You couldn't before because they weren't necessarily legal. Now they are.
Yeah.
And once the U.S. government puts its imprimatur on this industry, which it has, we have the most crypto-friendly SEC one could imagine.
Yep.
You're going to have this new wave of participation, and so we might not be in the traditional cycle.
Cycle forecasts are not exact science, but they tend to be a solid roadmap for the direction where prices are likely headed. And it's not good news for gold, especially after this run, people. I mean, look at this. It's not unusual to expect this, and you're going to get it, Larry says. Okay, what about digital gold? I know you love this. What about Bitcoin? Regular viewers know that I've been a huge fan of crypto for years, but Larry points out that gold bugs and both Bitcoin bugs have a lot in common. Both distrust the dollar, both want privacy, and both tend to doubt the Federal Reserve. But there are no commercial uses for Bitcoin, and you can't melt it down and sell it at the pawn shop. That's why Larry's not totally sold on the idea that Bitcoin is a digital replacement for gold. It's much more that it appeals to the same constituency as gold. In reality, though, it's a market driven largely by emotion. Still, Larry found a value relationship between Grayscale Bitcoin Trust, that's that GBTC that those who trade this know very well, where they have the most historical data on Bitcoin prices, and the dollar index, which measures the greenback against a basket of foreign currencies. Take a look at the weekly chart of GBTC with Larry's valuation model relative to the dollar index down at the bottom. While not exactly a timing tool, he says it's been a good way to understand when to expect major moves in Bitcoin. Recently, GBTC was overvalued relative to the dollar, okay, which suggests a decline might be coming. So how can we time the move? Well, take a look at this chart of GBTC with Larry's cycle forecast in red and blue. The red line is the shorter-term cycle that seems to repeat itself, while the blue line represents a longer-term cycle. Right now, they both point to lower prices for Bitcoin. Wow. Like gold, Larry thinks it's possible this week this could last through the first couple months of next year. So you see that this is where 26 is. It does go back up, but this is what we're focused on, right? We don't want to get hit by this thing. Here's the bottom line. The charts interpreted by Larry Williams suggest that both gold and Bitcoin could be headed lower for the rest of the year. Remember, we didn't really get a good look at 2026. Rest of the year is what I'm concerned about. Given his track record, I certainly wouldn't bet against Larry Williams. There are so many other things that are working in this market. No need to stick your neck out for something that Larry has warned you away from. I'm always telling you to own some gold. Maybe the actual metal, maybe the GLD, maybe a miner, because it's a great hedge against both inflation and economic chaos. Gold's had an incredible run this year, up 42% for 2025. spectacular move. If you're owning the precious metals, a kind of insurance policy like I've been recommending, well, your insurance is paid out. Given how much gold is valued, though, does it make sense to keep sticking with it? Or could this be the right time to ring the register? This is a question that's torturing them. Now, it's a tricky moment for the economy. So I have a hard time predicting whether the macro situation will start favoring precious metals in, say, 6 to 9 months. But there's another way to approach this, and that's why tonight we're going off the charts with the help of Larry Williams, the legendary technician and market historian who's been the best in the business since I was a teenager. Larry's written over a dozen books and created a ton of proprietary technical indicators I use all the time. Maybe you do too if you're a technician. He's also made some incredible calls in the last few years on this show. His track record unassailable. So when he tells us that gold is headed lower, well, you better believe we got to take him seriously. What makes him bearish with the precious metal? Well, he's got some charts that show us what you'll be shaking when you're finished with this one. First, let's do a historical exercise. Take a look at this weekly chart of the gold futures from a few years ago with something called total open interest down at the bottom. That index, the black line in the following chart, shows how many futures contracts are open. It reflects the total number of positions outstanding in the gold futures market at any given time. At the same time, each week we also get to see the total number, net number of open positions held by what are known as commercial hedges. These are companies that either produce or use gold. The actual traders, right? The real guys. Larry's a big believer in tracking the behavior of the commercials because they understand the commodity better than anybody else. They have to buy or sell gold as part of their day-to-day business. They're not just speculators, and that gives them a unique insight. So we really want to focus on the commercials, all right? Gold futures is rising, but the futures contracts held by commercial hedgers are falling. That means people buying gold are speculators, either individuals or professional money managers. As Larry sees it, that's a bad sign because the commercial interests are the ones who are best informed. They know the most, and they seem to have no interest in gold. That's very, very worrisome. You should be very concerned when you see the commercials have no interest. We saw this pattern at the start of 2022 when the total open interest had a dramatic rise while the commercials were selling gold futures aggressively. Larry says this is a typical pattern you see when you get a market peak. The smaller blue ellipses, they illustrate the same pattern. When there's an increase in open interest not driven by the red line of informed money from the commercials, the price of gold tends to decline. Why is this so important? Well, take a look at the weekly chart of gold this year with the same total open interest data we saw in the last one. When you look at the current activity in the gold futures, we're seeing much higher open interest. More people trading the futures, but the commercials, what are they doing? They're selling. They're not buying. It's the same pattern we saw back in 2022. That marked the peak in gold prices. Larry points out that we saw the opposite of this at the beginning of the year. This is really cool. Right here, right? The black line was declining, all right? But look at this thing, meaning less futures activity overall. But the red line roared, okay? So then you see, we start going up, and then what happened is, you get this, black line down, red line up, and that's when the big rally started. That preceded a magnificent rally in the shiny stuff. You wanted to catch this one, all right? Now that pattern has flipped, and Larry believes that we're going to have a potentially ugly decline because of the commercials. That's not all. Take a look at this chart of gold prices with the average seasonal pattern down in blue at the bottom. Larry's always looking for these cycles that repeat themselves over and over, including how commodities tend to trade at any given point in the year. And hey, when you look at the seasonal pattern in gold, this time of the year is about when we would expect the yellow metal to naturally have a pullback. You can see about where it would be going, that's the seasonal, and where it is right now. So you would think it would track that. That's what he's saying. What else? When Larry digs into the longer-term historical cycles for gold, he says the strongest one is the 8-year cycle. That's the blue line on this next chart. As you can see, gold tends to follow this 8-year pattern pretty darn closely. And right now, that cycle says that the gold prices will likely head lower through early next year.
Welcome to the Crypto Teacher.
Don't forget to like and subscribe to the channel.
And I come back with that video just to make you think. And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Mike Novogratz saying we're going to get clarity this year. But then, guys, he tried to blame the pullback on Arthur Hayes. Yes, guys, you can't make it up. We know we've been having whales selling, and it's not Arthur Hayes. And on top of it, this week we have futures, and we know it's like clockwork. And then he was asked a good question. Is crypto leading stocks on its way down? And you know, I've always told you that crypto leads stocks. But we do have a catalyst, and that's these altcoin spot ETFs. So the only thing we sit back, get our popcorn, and let it play out. Now we have Jim Cramer on gold and Bitcoin again saying that we're going to be pulling back. And of course, when Jim Cramer says something, we normally do the opposite. The only thing we have to do right now is follow the bond market and follow the Fed. And again, in crypto, we have the catalyst of the spot altcoin ETFs. And then we have Tether gets a $500 billion valuation. Yes, guys, you heard that correct. Which it makes no sense whatsoever unless you know about this new digital economy. And remember, the crypto teacher told you. Now, I've talked about this plenty of times, even in the afternoon video. All the energy that AI is going to need. And of course, in the mainstream media, it is not a big deal. But when Bitcoin needed all this energy, it was nationwide news. And who's picking up the bill right now? That's right, the consumers. Those who are near these data centers, I guarantee you, your electricity bill is going up. And remember, the crypto teacher told you. And we have Scott Bessent on Argentina bailout. And we have no business giving any country any money when we are $37 trillion in debt. Guys, you can't make it up. But we know your life is an illusion and TV is your reality. And then we have the TikTok deal may happen tomorrow. We're going to get our popcorn, let it play out. But if we get even one Chinese board member, we know what's up. China is still going to be getting paid and then also still having control. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Close with the Tether team, and we have very frequent dialogue with them and their closest advisors, including people like you said, like Cantor, Brett and Lutnick, and Bo Hines. And so it's not surprising to us that there is a lot of interest in Tether. Tether is the largest stablecoin issuer. It has around $170 billion of stablecoin issuance, 60% market share, so clearly very dominant. It's also one of the most profitable businesses in all of digital assets. On that $170 billion of issuance, they probably are generating close to $7 billion of revenue. And so in that context, it's no surprise to us that there are a lot of people who are interested in getting exposure to that, both to Tether specifically, but also to stablecoins as an industry. A $500 billion valuation is not cheap. When you think about it, on that $7 billion of revenue, that's maybe growing extremely fast over the next few years. Innovation is going to play out over time. And importantly, have the right people and relations in place to really act on it quickly when they have the opportunity. And so we saw them bring on Bo Hines recently, which we think was a great hire, someone who clearly a standout policy leader. He will be pretty effective in how he helps Tether grow their U.S. business, which historically they haven't been doing.
Outsized numbers being thrown around regarding AI and data center buildouts, including OpenAI's $850 billion expansion. That's equal to the output of 17 nuclear plants. But how is the energy grid going to handle the added load, and who will ultimately pay for the increased consumption?
Of energy before, like from 2010 to 2020, it was pretty flat. Then it's really starting spiking up, and that is what we see also for the next 10, 15 plus years. A strong increase, and that means it really puts a lot of stress on the power grid. And we do need more power, but we also need power at the right time, and that is where we come in with more of automation, being able to balance that.
But Senator Warren, Elizabeth Warren, says that this is a taxpayer-funded bailout and is more about politics than U.S. interests. What do you want to say to Elizabeth Warren here?
Well, I tweeted it out yesterday. Senator Warren and her protege, Mr. Mondami, who's running for mayor of New York, they are American Peronists. They want to do to the U.S. economy what the Perones, the General and Evita did to the U.S. They want to take control. So, and I guarantee you, and there are not a lot of things in life that are sure, that New York City will be coming to the federal government for a bailout if the Mondami plans are implemented.
And are you going to give him that bailout?
It will be the same thing that Gerald Ford said. Drop dead.
Drop dead.
Because we're getting reports here in the U.S. that President Trump could be signing a deal to facilitate the sale of TikTok as soon as tomorrow. What are you hearing on the China side?
Curious to hear what the reaction is from the U.S. national security community, because it's very unclear to me as to whether or not ByteDance or the Chinese government would be completely out of this deal, because unless ByteDance is completely out, it just seems as though the Chinese government would potentially have some influence.
To NBC News that ByteDance, the former then parent company of TikTok, would choose only one director of the 7-seat board. The details here that have been offered up by the White House to NBC are similar to what's been reported so far. TikTok's U.S. operations will be run by a new joint venture company. ByteDance would hold less than 20% of the stock as required under the law that was passed earlier this year. The new company would be majority owned by American investors and operated in the United States by a board of directors with national security and cybersecurity.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told his members that this has been part of the reason here that the system is kind of clogged up, if you will. During that auction that we saw a little bit before, the attack had prevented ICBC, according to the Financial Times, from settling treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of treasury markets.
Now, it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.